For the avoidance of doubt, the Simple Side does not provide investment, tax, or legal advice. As with any asset, the value of any asset class can go up or down, and there can be substantial risk that you lose your money buying, selling, holding, or investing in any asset. You should carefully consider whether trading or holding assets is suitable for you in light of your financial condition.
Welcome to the Simple Side. Market beating picks inside. There's no jargon and no time to waste. Join the Simple Side and end up in first place. Welcome to the Simple Side. Market beating.
All right, welcome back to the Simple Side. If it's your first time here, welcome to the Simple Side. You're joining one of the nearly 300,000 returning subscribers. Before we get into today's newsletter, I just want to remind you that there's a survey link in the newsletter, which you can find at thesimpleside.substack.com. I want you to go fill that out. Let me know what you think of the newsletter, what I should change, what I should keep, anything else in between. Let me know your thoughts there. I also want to remind you that we have our daily newsletter for just $1 a month or $10 a year that you can join by clicking on the link in the newsletter. So go and check that out as well. Again, the prices on that are going to be rising to $5 a month or $60 annually. So get grandfathered in now and join our daily stock newsletter. Every week we cover the requests that our subscribers sent us. Last week, I just had a bunch of people asking about paid and lifetime subscriptions. So here's a bit of information on our subscription model. You can join our paid newsletter for $20 a month or $200 annually. And this price is going to be increasing soon. So if you want to get grandfathered in at the current pricing, make sure you subscribe today before these prices start to rise. I also want to remind everybody there's one final slot available for our lifetime subscription. When this is purchased, we will give you access to everything that we build, including our website, including insider picks that we're building out, including politician picks, everything. You're going to get access to everything forever. So get that last spot if you're looking to join the newsletter for a lifetime. All right, this week we're going to hit on some interesting stuff here. I want to update you guys on all the current updates and developments that we have in the newsletter. Look for an email on Monday that's going to be discussing copy trading. Paying subscribers are going to be getting this email. You guys are going to be able to log on to a platform and just find the Simple Side, click copy, and it will be as easy as that. I've got a couple of different portfolios on the copy trading platform that you can go and find and copy. And some that haven't even been released yet to the newsletter subscribers. So if you're a paying subscriber, look for that email on Monday and then make sure you go and join our copy trading platform. All right. For those of you that remember, we have been asked to create a stock or ETF scanner, and I'm closing into the final bit of development here. What you're going to see if you're reading the newsletter is a screenshot of what this tool currently looks like. And typically, people charge over $100 per report that gets sent out like this. And we're only charging you the annual subscription, which not only gives you the newsletter access, but also access to this reporting tool. So go check out what that picture looks like. Decide if you want to join or not. But hopefully you look to join this tool I'm really excited about releasing. All right, we're also sending out our new educational newsletters. We sent out the last one last week talking about covered calls and trading them in retirement. So if you want to get that educational stuff, make sure you subscribe to see all of that coming out. We're also in the process of updating our website with politician trades, insider trades, hot stocks, all that good stuff. So make sure that you join today so you can get access to that website as well. I've also made some updates to our insider trading section, so it'll show you the stats about how the trades that the insider has made typically perform. Now, as another reminder, last year we gave away over $4,000 to paying subscribers, and next month we're going to be doing our first $2,000 giveaway worth of Apple stock to one lucky winner. So make sure you're on the paid subscription to get entered into that. All right, finally, let's talk about some cool stuff here. Let's talk about our weekly trade performance. As you know, this newsletter every week sends out anywhere from 3 to 6 picks of stocks we think are going to perform over the next week. And these have been doing incredibly well. Over the past 35 weeks, we've returned 29.1%. The SPY over the same period of time has only performed 4.01%. Our annualized returns set at 43.24%, and the SPY's annualized returns are predicted to be 5.95%. So we're very much outperforming. You can go and see all the recent trades in today's newsletter. All right, let's talk about the markets and the outlook that we have. Currently, the projected year-to-date returns on the market is 0.9%, a slight decrease from last week's 1%. This week in the markets, we saw 5,437 stocks with gains, and we did have a solid group of losers as well, with 4,086 stocks losing in the market. The median return this last week was plus 0.67%. These gains show a relative momentum swing upwards in the markets, but the question of sustainment remains. Will the market continue up or stay low? The bad news is that there seems to be no turning around from the current negative directional shift. We will likely see next week open lower. All right, let's talk about the sectors and how they performed over this past week. The top three performers were energy, communication services, and technology. Energy up 2.64%. Last week, energy was also a best performer. Communication services were up 1.62%, and last week, this was a bottom three loser. We've also got technology up 1.01%. Now, the bottom three performers were utilities, down 0.14%, real estate, down 0.17%, and then we've got consumer defensive, down 3.57%. This was also a bottom three loser last week. Now, Mohnish Pabrai, also known as the Warren Buffett of India, believes that investing in what is hated and unloved is the best road to success. So, if you're looking for sectors that are currently hated by investors, look at these sectors. These have underperformed the market year to date and are underperforming over the past month. We've got healthcare, which is down 12.23% year to date, consumer cyclical, which is down 12.52% year to date, and technology down 10.8% year to date. Now, here is my commentary on the markets from this past week, highlighting that Buffett sold his entire stake in ticker VOO, which is also the Vanguard's S&P 500 index. Over 3 weeks ago, I began this commentary with the statement that the market is not showing signs of slowing its downturn. And look where we are now, continuing down. Over this past week, the SPY eked out a 0.23% return, which is nothing compared to the negative 6% the market has returned over the past month. But that pales in comparison to what Warren Buffett had done this week. Like I mentioned earlier, Buffett sold his entire stake of ticker symbol VOO, what some consider to be the best S&P 500 ETF in the market. What grabbed my attention, however, isn't the fact that he sold. In fact, he's been risk off in the market, keeping a lot of cash on the sidelines for a long time. What surprised me is how few people are talking about this massive sell-off. One of the biggest and best investors in the world just sold his S&P 500 stake. Why isn't everybody going crazy over this? Berkshire has grown its cash pile to over $334 billion, nearly triple what it was in 2024. There is clearly a market mispricing that Buffett sees. He does not like it, and neither do I. The uncertainty of the tariff war has also been driving investors wild, and many folks are becoming increasingly nervous about the speculative state that has been driving the market for the past 3 years. I wrote a post about this not too long ago stating my opinion on the current state of the market, and you can read that below. It's called Dumb Money, Fueling the Market Since COVID. Again, you can find these newsletters at thesimpleside.substack.com if you're just listening to the podcast. You've heard me before discuss how the market is currently overvalued by over 100% based on GDP levels and historical market returns. So don't expect things to turn around before the end of March. What are investors like yourself supposed to do to protect their investments during market sell-offs? Well, let's look at what the inside money is doing in the markets, what politicians and insiders are trading. We track 2 ETFs for politician trading, one of them NANC and the other KRUZ, which track Democrat and Republican tracking respectively. NANC was up 0.14% on the week, down 7.78% over the past month, and is down 4.88% year to date. Cruise, on the other hand, is up 1.31% on the week, down negative 3.82% on the past month, and down 1.15% year to date. For comparison, the SPY is down 3.53% year to date. Over the past 30 days, we watched 22 politicians make 427 trades with a total trade volume of 9.03 million. The buy-sell ratio for politicians is now 3, down from 4.4 last week, and still shows bullish sentiment. However, it is declining. You can see the 5 most recent politician trades in today's newsletter by going to thesimpleside.substack.com and finding the most recent post that we made. Now let's talk insider trading. We track another ETF here, ticker SURE. That is down 0.51% this past week, down 4.51% this past month, and down 3.39% year to date. The monthly buy-sell ratio is up to 0.31, higher than last week's 0.29, but below the 5-year average of 0.35. This indicates slightly bearish sentiment from insiders. Now, there's 2 insiders that made trades this week that we want to highlight. The first is Dustin Moskovitz. His average return per transaction is negative 53.08%. His outperforming transactions are 2% on 54 trades. Now, the ticker that he bought this week is Asan, ticker ASAN, or Asana Inc. It is 99.99% of his portfolio, and he's got 56 buys and 1 sell over the past 5 years. Now, Dustin is the perfect representation of why following insiders selectively is important. While he may be buying close to a 52-week low, his trades typically underperform, and copy trading of what he's doing requires a lot of research, which is why you should be following the Simple Side, because we take and break down all of these insider trades for you. Now let's talk about one that's quite a bit better. Broadwood Partners, their average return per transaction is 23.29%. They outperform on 52% of trades, and the ticker that they traded this week was STAA. It's currently 76% of their current portfolio. They have 17 buys and 9 sells over the past 5 years, and STAA is at a 52-week low of $17.70. It has been experiencing large amounts of insider buying and looks like a place that you could possibly make some returns over the next week. All right, in the newsletter, we talk about our gold trader. We talk about gold tracking. You can go and check that out for yourself. I'm not going to discuss it too heavily now. We also talk about our educational article, or article that we send out every week. We do a quick summary for you. This week, we talked about covered calls. We tell you how they work, what their benefits are, why they're good for retirement, their downsides, and how you can use them to make smart trades. We've also got some portfolio updates for you here. I'll just do a quick highlight on everything. Our current flagship fund is down around 4% this year, beating the S&P 500, which is down around 4.3%. Our AI, or second fan effects, portfolio, also known as the Contrarian Trades portfolio, is up 46.94% year to date, which is boosted by our HIMS stock, which we sold at 99% returns earlier this year. And our weekly trades portfolio is up around 11% year to date, which is of course what paying subscribers have access to here once you hit this paywall in the newsletter. Remember, you can join that lifetime discount for 50% off. You can join our paid subscription now before the price starts to increase. And paying subscribers, you can now go read the newsletter and find all of the buys that we have set out for you over the next week. Thanks for joining us here on another week of The Simple Side, and I look forward to seeing you next week.